Hey guys, TommyBryson here, and today I'm going to show you exactly how to invest into index funds and also show you the best 5 index funds right now in the market and how much money you need to actually invest into them. And by the way, although we are in September right now, 2020, and the market has been down for the past 3 weeks, nothing has changed about how I invest my money. I still invest the same amount every single week because again, if you invest every single week, you do dollar cost average, you buy high, you buy low, but in the end, you get the average, and that way, market downturns, headlines, none of that stuff matters, okay? Just keep investing and stay consistent. Now, if you guys are new here, I post videos every single day, so make sure also subscribe and hit the bell so you're notified, and on top of that, also destroying the like button. Now, the first thing is this. I'm going to give you guys Vanguard index funds, but if you want to use, for example, Fidelity or Schwab's and use their index funds that they actually have available, the answer is just make sure they don't have any high management fees, and that way you're good to go. On top of that, Tommy, what is a mutual fund and also an index fund? Well, in reality, an index fund is just a type of mutual fund. In reality, the big difference is that an index fund is held passively and they don't trade that often, and that way you save a ton of money on taxes and also fees. While some mutual funds out there are held actively and they trade back and forth trying to beat the market, and then you get a bunch of taxes and also have a huge management fee of around 1 to 2%, which end up costing you a ton of money in the long run. But again, an index fund is also a type of mutual fund, so just don't overthink it whatsoever, okay? Now, let's get started here, guys, okay? And the first thing I want to show you guys is basically how I go out there and find mutual funds with Vanguard. And all I have to do is just type in Vanguard mutual funds on Google. And that's basically it. And I basically click the first link and they show me the full list of every single mutual fund they actually have available, including index funds and also including actively held funds also. But again, I'm only interested in index funds. So in this case, I go over the filter and I unclick active ones because basically I don't want to see those because guess what? I'm not interested in investing into those. So it went from 134 funds to only 62 funds. And these all here are just basically index funds, okay? Don't cost that much money, don't have that many fees, and that's what I love about them. Saves me a ton of money and taxes also. Now, let's get started officially, okay? Now, the first index fund I want to talk to you guys about is basically the S&P 500 by Vanguard, and the ticker symbol is VFIAX. Here it is right here, but I'm also going to show you guys in a second, okay? But this fund right here basically contains the top largest 500 companies in the US, okay? Now tell me, why not invest in the total market one and just have the entire stock market? Because basically, guys, if you guys don't know this, the S&P 500 contains around 80% of the entire US stock market. It's kind of like, for example, how 20% of the people in America hold 80% of all the wealth, and that's exactly what it is, because basically the top 500 companies are so large that they basically contain almost 80% of the entire wealth in the stock market in the US, okay? So just keep that in mind. Now, the reason you want to invest into this fund is because basically you want to get the average return every single year of the US stock market, and by investing in the S&P 500, you're basically getting that every single year. So keep that in mind. Now, I'm going to show you exactly how to find it when it comes to going on the Vanguard website. All you have to do is just go for it and look for it and go for the US stock funds. And here it is, the first one right here, the 500 index, Admiral shares, okay? And just click it and it's going to take you over to the actual index fund right here. Now, right now, it's trading at around $307, so keep that in mind. It is expensive, and by the way, in my portfolio, this accounts for around 38% of all the money I invest. But there is one caveat, guys, because to invest into this index fund right here, the minimum investment is $3,000, okay? Which is a lot of money if you ask me. But the expense ratio is only around 0.04%, not that big at all. And on top of that, you get a dividend yield of around 1.57%. So the main problem is that basically, if you want to invest into any majority of these index funds, I'm going to tell you here, they all require a $3,000 investment. Now, before you leave this video, don't worry, I'm going to give you the ETF version. That way you can invest into it with $5 or $10, but you don't require that much money, okay? 3K is a lot of money. And by the way, guys, some of the holdings right here are basically Apple, Microsoft, Amazon, Alphabet. By the way, Alphabet is Google, if you didn't know. Also Facebook, Berkshire Hathaway, Visa, Procter & Gamble, and even Nvidia Group, okay? So basically, the top largest 500 companies in the US, okay? And by the way, interesting enough, they actually have 509 stocks, not 500 companies in total. So also keep that in mind. Just like an interesting fact, doesn't really matter that much. But the idea is that if you invest into the S&P 500, you're basically going to get the average return every single year of the US stock market. Now, as I promised here, guys, because not every single person has 3K to spare, the answer is if you want to see the ETF version, they always have right here in this section of the index fund, it says here, next to the minimum investment, it says available as an ETF, okay? So just click that right there, and it's going to take you to the ETF, and the ETF is called VOO. That's the ticker symbol. You can find it on M1 Finance, on Robinhood, on Fidelity, anywhere out there, okay? And again, you can invest with fractional shares with $10, $20, even $1 in some brokers, but the answer is you don't need that much money. And this ETF right here tracks the same thing as that exact same index fund, but it doesn't require any minimum investment. So that's the cool thing about investing also into ETF. And it also gives you a 1.58 dividend yield every single year. So pretty cool if you ask me. Now, there is one thing that I do want to tell you guys. Although I invest like 38% of my money into the S&P 500, the answer is as I get older, I'm going to invest less money into it because basically all the US is doing pretty good and it will do good in the long term. The answer is as you get older and you're closer to retirement, you want to decrease the amount of money you put in here and just put it into something that's actually a lot safer and less volatile. So just keep that in mind also if you're investing for the long run. Now, let's go into the second index fund here, and it's basically investing into developed markets outside of the US. And the ticker symbol is VTMGX. Here it is right here, and also description contains every single thing I'm saying here also. But by investing into this index fund right here, you're basically tracking companies outside the US that are either large cap, mid cap, and also small cap, but that way you get exposure outside of the US market. Why? Because although the US is doing great in the future, and sometimes outside of the US performs a lot better, and you want to get some of those gains also. Now, here is how you find it also when you go to the entire Vanguard website. Again, all you have to do is just go down to the international section, and here it is right here, international stock funds, and here it is right here, VTMGX. You click it and it takes you over there right away. And again, it does require a $3,000 minimum investment. Again, very expensive. The expense ratio is only 0.07%, not that high. It also doesn't pay any dividends, but I want to show you guys some of the holdings they actually have here, okay? And here it is. They contain Nestle, and by the way, if you guys didn't know this, Nestle is basically Maggie, also Kit Kat, and a lot of brands that are not just big in the US, but also big internationally all over the world. When I lived in the Dominican Republic for a very long time, all the ice cream I ate came from the Nestle company, okay? On top of that, they have Toyota, and that's one that everyone knows. But basically, the large cap companies, the mid cap companies, the small cap companies outside of the US, they're all inside of this investment right here. On top of that, it's around 52% that goes into Europe, and then Pacific 37%, and then Middle East like 0.5%, and so on and so on. But basically, by investing into this index fund right here, you get exposure outside the US. And again, some years the US is going to do great, but also some years the international market is also going to do great, and also sometimes even better. And on top of that, guys, here is the ETF for this investment right here. And by the way, all the ETF versions are going to be in the description down below also. But again, just go right here next to minimum investment, and you're going to see that the ETF is actually VEA. It costs around $41 per share. It's not that expensive, but again, it is risky. And that's why I only put around 16% of my investment money towards this investment right here, but not all of it. as much as I put in, for example, into the US stock market, okay? So just keep that in mind. Now, the third index fund is actually into small cap companies. Now, Tommy, why do I want to invest into small cap companies? By the way, small cap companies are basically companies that have a market cap of less than $1 billion or no more than $1 billion, okay? Now, although $1 billion is a lot of money to you and me, well, in the US stock market idea, it's not that much money when it comes to an entire company that's being traded. Now, the idea is that these companies, although they are small, they tend to grow very quickly, which basically gives you a lot more gains, but they're also a lot more volatile. And that's why you also want them in your portfolio. Now, the entire index fund name is actually VFIAX. Here it is right here. Again, link down below in the description. Now, when you go to the Vanguard website, all you have to do is scroll down to the US companies right here, US stock companies, because again, it is small cap companies, but in the US, and just scroll down from not large cap, not mid cap, but all the way down here to small cap, and look for the one I told you, VFIAX, and here it is right here. You click it, it takes you over there, and you'll see exactly what you're going to invest into. Okay, the expense ratio on this one is only 0.05%. It does pay you a dividend yield around 1.40%, which is actually pretty good. And on top of that, again, volatility and risk is very high, and that's why I only hold in here like around 14% of my money. Not that much, okay? And lastly, guys, here are some of the investments right here. You might recognize Zillow and also Etsy. Pretty good companies if you ask me. And the idea is that although these companies are small, they have a lot of growth potential, and that's why you want to be exposed to that market also. Some years small caps do very, very good. Some years large caps do very, very good, and that's why you want exposure in every single sector, including the international market. Now, the fourth index fund is actually in the real estate market, okay, in the sector market. And the idea is that although you want to be exposed to the entire stock market, also internationally, you also want to be exposed to real estate, okay? Because you also usually gain a lot more dividends, but you're also less exposed to like the entire like stock market is going down, real estate also goes down. Usually, no, they're kind of like separate. And that's why you also want some real estate investments in your portfolio. Now, the ticker symbol for this index fund is VGSLX. Here it is right here, okay? Now, the answer is, how do we find this on the Vanguard website? Again, just scroll all the way down to the entire sector, all the way at the bottom here, and there's just one that's like an index fund, and that's being actively traded, and just click it, and you'll find it right here. And basically right now, it's trading for around $113. Now, if you notice here, when you go to dividend yield here, it only tells you a note. Once you click the note, it's going to tell you exactly what the effective yield is at this current date right now. And right now, it's giving you around 2.67%, which is actually pretty good. On top of that, again, the minimum investment is $3,000. Every single fund here is $3K. But the ETFs are not that much money. So once you go to the Vanguard website, just click the ETF and you'll find it right away. And by the way, the small cap ETF is called VB. That's the ticker symbol right there. And here it is right here for the small cap ETF. But for the real estate market, the ETF, when you click it, is going to tell you is actually VNQ. And right now, it's going for $80, and it is paying you some dividends also. Now, the idea is that when you're investing into the real estate market, you're not connected to the stock market at the same rate. So that way, you're more diversified. And if the stock market crashes, your investments in real estate are still going to be doing pretty good. And the way I see it, guys, every time I walk by a hotel or a resort or a building or a hotel, whatever it is, I'm always like, you know what? I actually own a small fraction in that company right there. Basically, if you look at all the investments in this index fund right here, you'll be surprised at what you're actually being a partial tiny owner of. And that feeling is still pretty awesome to me, if you ask me. Now, number 5 is an emerging market index fund, and the symbol is VEMAX. Now, one thing is this, guys, okay? These investors right here are also very, very risky. Now, the idea is that you're investing into an emerging market sector, and that can give you a lot of rewards, a lot of gains, but also you have a lot of risk at the same time. So when you go to the Vanguard website, all you have to do is scroll all the way down to the bottom to the international stock funds, and you'll see, for example, emerging markets, and here it is right here, the VEMAX one. And when you click it, it's going to tell you all the information right here. You're basically investing into China, into India, into emerging markets that carry a lot of gains also, but also carry a lot of risk at the same time. So just keep that in mind. And again, it's only around $36, but if you want to invest into it, you do require 3K. But if you want to invest into the ETF with $10 in M1 Finance or Robinhood, whatever you want to do, the answer is the ticker symbol is VWO. And right here in this index fund, I only invest around 4% of my money. And also into real estate, it's only around 8%. Now, if you've been counting, guys, by this point, those are 5 index funds right there, but that's only around 80% of my entire portfolio. So I want to give you guys the other 10 and 10% because I also do have 2 more index funds that I actually invest into, and I highly recommend to balance your portfolio out if you want to invest the same way I actually invest, okay? And by the way, these are index funds that track bonds, both treasury bonds and also corporate bonds, because all those stocks do great and real estate does great. You know, you actually need to have bonds in your portfolio. That way, when the stocks go down, the bonds tend to hold their value, okay? And also go up in price also. So keep that in mind. Now, the idea is that the first one is actually I invest into treasury bonds, and they're all short term, between 1 to 3 years of maturity. And here it is right here. By the way, the symbol is actually VSBSX, and here it is right here. I'm going to click it, and it's going to show you all of the information. And it actually pays me around 0.09%, which is actually pretty low. But again, interest rates are dirt cheap right now. But also the risk is very, very extremely low, because I'm basically investing into treasury bonds like the US bonds, okay? And if that goes down, well, the whole government goes down, and that's why they're such low risk. And right now they're on $20 per pop, but I do require 3K. But if you want the ETF, well, the ETF symbol is actually VGSH, and it's going for around $62 right now. But again, you can invest into it with like $10 to $20 using any app out there. Now again, the reason I put around 10% of my money into treasury bonds is because basically I want exposure to the bond market, because usually when stocks go down, bonds hold their value and also tend to go up. And I want that flexibility. I don't want my whole portfolio to just come crashing down, okay? Now, the last index fund here is actually investing into corporate grade bonds. And again, corporate grade bonds are riskier than the government bonds, but basically they give you a lot more dividends because basically they are riskier. And usually everything, guys, in life is basically more risk, more return, but just keep that in mind. And here I only invest around 10% of my money, but I'm going to show you guys right here what the symbol is. And the symbol is actually VICSX, and you'll find it under the investment grade US bond funds, okay? So just keep that in mind. Now, once I click it, I'm going to show you guys exactly all the details, and basically they pay me around 1.67% in dividends, which is actually pretty cool. But on top of that, the expense ratio is around 0.07%, which is actually pretty fine also. But the risk potential is only 2, not that risky at all. And also the ETF of this index fund right here is actually VCIT. And again, I invest around 10% of my money into this fund right here, and also into the ETF. Now, I want to make something very clear here, guys, because obviously you just noticed that to invest into this entire portfolio I built up, the idea is you're going to require around $21,000 if you just do it with index funds, okay? Very, very expensive. But if you just go ahead into M1 Finance like I did and build a portfolio there, you can basically invest with $25. And one more thing that I don't like is that basically you have to rebalance your portfolio every single year or every single 18 months, meaning that although I want 38% here of the US stock market and also maybe 8% to the real estate market, well, every single year that's going to fluctuate up and down. And whenever that happens, I have to sell some here and buy some more here. But to do that is time consuming, and on top of that, they don't do it for you automatically. And on top of that, you can't buy fractional shares either, so it's going to cost a little bit more money. So keep that in mind, and that's why I invest with M1 Finance, that lets me invest into fractional shares and does rebalancing for me automatically. But one thing is this, guys, one hack, one back door is that basically if you want to invest in the portfolio but not pay the entire minimum investment thing, the idea is that you can actually invest through it with a 401k account or a Roth 401k account, and they basically don't even consider the minimum investment, but they do charge you a $20 fee every single year per every single index fund. So there's something to think about there also. Just do some research on that. But overall, guys, to not make this video more longer, the point is, if you have the money to invest like this, then great. If you don't, just build an ETF portfolio with investments and just do it in M1 Finance, and that way you don't have to have that much money to get started investing, okay? And the truth is, I only invest into these funds with my retirement fund and not with my actual like normal taxable account, because basically it's too much money to actually get started and to maintain the entire account. And that's why I basically do it with ETFs inside of M1 Finance. Guys, I'll see you guys tomorrow. Thanks for watching. If it made sense, comment down below and let me know. Any questions also, comment down below, let me know. I'll see you guys tomorrow. Thanks for watching. If you like it, well, like this video right here. If you're new here, subscribe to the channel and hit the bell so you're notified. And if you want to text me or talk to me, subscribe to my Patreon, link down below. Or if you want to watch a video on basically how much money my portfolio makes me every single year or every single month, also, it is right here. And click it on. See you guys tomorrow. Thanks for watching. And as always, peace.